You have to have a system for managing your money. You have to have a process for managing your money. The system is something like QuickBooks. It's a financial software. I I'm a proponent of QuickBooks Online. That's what we use in Curbs. I teach it because you need a business system. And QuickBooks is a management system for businesses to manage our money. Since we're businesses of wealth creation, as the CFO of our household as a wealth creating business, we use QuickBooks Online because you can itemize it and bucket and cash flow and run profit and losses. Something you need to do is run what's called a household profit and loss that we do in Curbs. So you make sure that you're profitable. So using those profits to create those multiple streams of income. So the faulty mindset is when I have plenty of money, then I'll manage it. The truth is when you manage it, you'll have plenty of money. And this is the management piece. You have to know how to manage your money. Right here, this is the Curb system for how we teach to manage it. And I don't have time to go through it here, but also you can take a picture of this again. Again, you can do this all on your own. In Curbs, we set up these buckets. We set up this financial system. We upload everything to QuickBooks Online. You get a chart of accounts. You get your profit and loss. You get your balance sheet. Again, that might sound overwhelming. It's super easy when you get step-by-step instructions on exactly what and how to do it based on your numbers and your surpluses that you've already established in Principle 1 and Principle 2. But basically, we're bringing $100,000 in, and then we have these different buckets. And this just means part of what we teach is what I call the Curbs system. It's a Curbs money management methodology. It's a prescriptive process for how you manage your money. And you set up these different buckets. So in Curbs, we set up a tax bucket, a wealth bucket, a health bucket, a rainy day bucket, an education bucket, and a dreams bucket. You set up these different accounts. You attach them all to QuickBooks. It gives you one dashboard, and you manage money when it all comes out, and you're always moving your money. That's another thing. Money needs to move. People say, oh, money is energy. No, money is not energy unless you create energy out of your money. So if we paid ourselves $100,000, we take and we put this into what we call our main checking account. We put $22,000 into a tax bucket. We can't think that's our tax percentage. We know our margin in this case is $15,000. So we move $15,000 into the investment bucket here. We move $5,000 into a self-care bucket to make sure we have money to invest back into ourselves. What's left over there would be $58,000. It's still in our main account. And then we move $38.67 into a rainy day bucket. We move $38.67 into a savings bucket. And we move $38.67 into a dreams bucket. And then we'd have $46,004 left over that would allow us to pay the rest of our bills. So again, this is a way that when we pay ourselves $100,000 a year or $100,000 this month, or whatever the case is, this is a formula for what to do with every dollar of the $100,000, to give it a job. The money in this bucket, the job here is to pay taxes. The money in this bucket, the job here is to buy an asset. The money that's in this bucket or this account is money that goes into the chiropractor or the spa or the massage or whatever we need to do to take care of ourselves. The money in this bucket goes towards rainy day because we always have a rainy day. This money, the job is maybe education for our kids to make sure we're putting money there. And this is for maybe a vacation or something that would go in our dreams bucket, is to give all this money a job. Then this $46,400, as I mentioned, is that's what we get to pay the rest of our bills. So the cost of our lifestyle needs to be less than $50,000. Here's the takeaway. I'm going to round this up to $50,000. This is a pretty good rule of thumb formula. That to be able to make sure you have enough money in all of these buckets so that you have a rainy day fund, so that you have a fund for vacations or expensive like to remodel the house or buy some new furniture or whatever the case is, you have to have money in these different buckets to be able to afford things and not go into debt. This is how we stay out of debt. This is the stay out of debt strategy. But to be able to make sure you have enough money split up between all of these things that keeps you out of debt and keeps your money growing and abundant. Your lifestyle, the cost of your lifestyle shouldn't be more than 50% of the money you bring in before taxes. This is why none of us have a surplus, because usually if, we're bringing in $100,000, let's say that, we even pay our taxes at $22,000, we're spending the $78,000 here on our lifestyle. And we do not have a surplus. So we're betraying number two because we don't know our numbers and what the max amount should be in this box. So again, this is work that we do in Curbs, as we know the numbers that we fit into each one of these boxes, and we set up the buckets and learn the system for how to manage it and sweep money into the categories. So in the wealth game, you consciously and deliberately track and manage every dollar of income and expenses. You give each dollar a job. You categorize and itemize every expense. You move your money to create cash flow into these 6 buckets, and you run a business. You run a household profit and loss, and this is the methodology and the system and the formula for creating financial freedom. There's nothing here I've shared with you that you can't do on your own. None of this is rocket science. None of it takes, you don't have to have an accounting degree. You don't have to be a Wall Street investor. You can hate numbers. You hate math. And all of this is super easy to do. You just fill in the blanks and figure out your own numbers. All right. So you must have a money management system, follow a system, use a system. Like I said, we use QuickBooks, which is the bookkeeping system, but you need to keep your books. This is your money. You need to be in there. Like we think like, oh, I need to hire a bookkeeper, or I don't like bookkeeping, or I can't do bookkeeping. It is so easy. My middle school kids can do this. It's just a story that we can't do it or it's too complicated. It's not. It is so easy once we get it set up. But we need a financial system like QuickBooks to manage the dollars. Why? Because if we don't have that, where does all our money go? It goes through Apple Pay. It goes through Venmo. It goes through our credit cards. It goes through our debit cards. It goes through our Google Pay. Our money is disappearing, and there's so many different pay structures right now. So if we don't have a financial system that tracks where all of our money is going out, we will never have a surplus. It is so easy to spend our money these days. And again, it's a rigged system. The banks are here to take our money. They're making it as easy as possible. I mean, isn't Amazon awesome? They save all your credit card information. Everything shows up tomorrow. It is so easy to spend all of our money. Amazon loves to take our money. And it's so seductive because we can buy today and get it tomorrow. I don't know about you, but sometimes I clear my cookies. And when I clear my cookies, it takes all my credit card information out. And I'm so annoyed that I have to re-put in my credit card information. But I'm thinking if we had to put in our credit card information every single time, it might slow down some of our purchasing. But it's just to know that all the banks, the Amazon bank, all of them want to take our money. They want our money in their account and not our accounts. Amazon doesn't care if we take a vacation. Amazon doesn't care if we put our kids through school. Amazon doesn't care if we're healthy or not. Amazon will just dangle things and make it as convenient as possible to get things as quickly as possible and to take our money as quickly as possible. And everybody's in the money game. And now everything has payments. Like everything I go to says, oh, if you want to break this up into payments, this new thing you want to buy on West Elm, for example, you don't even have a credit card. You don't even need a credit card with West Elm. If you want to buy furniture, they've got their own payment system at 30% interest because you think you can afford it if you can break it up into payments. And again, the banks are rigged against us. They want us to be broke. All right, you have to become the household CFO. Become the chief financial officer of your household, whose job is to create generational wealth for the family. And get on the same page with your spouse. When you and your spouse have a destination, you manage the money together, have date nights where you talk about the money, you grow these things. You synergistically can grow your money so fast. if you can get on the same page with your spouse. I mean, it's crazy. It's 1+1 = 100. And here's just an example of what it looks like. This is an example of a household profit and loss, what it looks like in QuickBooks. And here's just a dashboard of what it looks like in QuickBooks. And this becomes your dashboard that shows you exactly what your financial situation is at any time. And you have to track your financial situation. Just like if you are gung-ho of getting in shape and losing weight and changing your life because you want to get healthy, you track your food, you look at your calories, you track your macros, you change your eating habits, you change the type of food that you eat. Why? Because you want to get healthy and you want to live a health abundant life. Your money's the same thing. So real quick, here's what example of a business profit and loss. Your business makes $1 million, and after all expenses, your profit's $325,000. That's a profit margin of 30%. You move that profit margin over that $325,000 over to your household. Your tax bucket's $75,000. Your investment bucket's $65,000. Your all those buckets, your savings buckets are $63,000. Your lifestyle burn is $252,000, which means your total expenses are $350,000, and that's just what's called a balanced sheet. So it's just to say, like, where every dollar is accounted for. Over here, your business made $350,000, and then your household is balanced where you're spending the $315 in all those buckets. Then you have your personal balance sheet where you start to track all your assets, and it'll eventually look something like this, where you have, how much you're worth, and then how much cash flow that net worth is getting you. But this is, you have your business profit and loss, your household profit and loss, and your household balance sheet, which are the tools that you need. And you need these tools and these resources if you're in the wealth game. You are not in the wealth game if you're not tracking these numbers.